Hi, my name is Stan, the Annuity Man, America's annuity agent, licensed in all 50 states. Losing my voice. I've been yelling at this camera all day, but we're talking about enhanced benefit riders and some examples of that. Really what we're talking about is income riders that have some enhanced benefits attached to them. Not all income riders do. We're going to get into weeds of that because there's a lot of really bad sales pitches going on out there. Surprise, annuity industry, right? But I'm going to strip all that down and make it understandable so that you can make a good decision whether these are something that you want to look into more, and maybe if you want some more coverage from that standpoint of end-of-life type care, which is kind of depressing to talk about, but we got to talk about it because it's reality, and we can do some things contractually with annuities that can solve for it and make that financial bite sometimes, make it a little less because you have these contractual guarantees coming in. So we're not going to do any of that until I hear music. Income riders are not like an annuity. You can't just buy an income rider. You can buy an income rider that's attached to a deferred annuity, like an indexed annuity, and typically that income rider is used for future income needs. It's a pension. It's a lifetime income transfer of risk, contractual guarantee that as long as you're breathing, the annuity company's on the hook to pay. I've done a lot of income rider videos. I've written a book on income riders. I can certainly send you that. But part of inside of that income rider book, talk about enhanced benefit riders, which is kind of part of the income rider thought. All right. So when you buy an income rider, you're primarily buying it for the income guarantee in the future. But I'm going to say a lot, but I'm going to say majority. There's a good many, how about that, of these income riders that also offer enhanced benefits as well for nursing home or in-home type care. And those are really the primary types. So if you think of from a categorization standpoint, enhanced benefit up here, and then there's two types. There's nursing home and then there's in-home care. Now, depending on what you want, we can quote and show you those. And I think at the time of this tape, and check the date, there's around 20 carriers that offer these type of enhanced benefits that are in addition to the income rider guarantee, but that are attached inside of that income rider. The good news is that it's guaranteed issue. So if you're smoking 10 packs of Newports a day and drinking a bottle of scotch, bingo, you get it. You qualify for it. That doesn't mean it's great, okay? The best long-term care coverage or that type of coverage is traditional long-term care, and that's a health insurance product. But there's a lot of people that can't qualify for that. As you know, life insurance companies and insurance companies in general, they want to insure healthy young people, right? Not people like me that are kind of slipping physically, as they say. Not mentally, of course, physically. So, the confinement care coverage, the enhanced benefit coverage, like I said, let's talk about the nursing home. And I wish all of the carriers were the same in uniform, but they're not. So you'd have to, in a lot of cases with the nursing home coverage, you have to actually be in a nursing home for a specific period of time. They're all different. But once you're in there for that specific period of time, then the income stream increases. Because in essence, what you're doing is you're proving that your life expectancy is less, which means that your guaranteed payments will be fewer, which means that they will be higher. Okay, so that's the first part. This is a nursing home. The other is this in-home / LTC, but it's really in-home coverage. And to qualify for that is when you can't do 2 of the 6 daily functions of life. You're saying, what's that? The 6 daily functions of life are things like clothe yourself, bathe yourself, be able to walk. Listen, if you can't do 2 of those 6, life stinks, right? It really does. And factually, if you can't do 2 of the 6, you're going to live an average of 3 years and a maximum of 7. But once you prove that to the annuity company, they're going to enhance that payout. They're going to increase that lifetime income stream because you've proven to them that your life expectancy is less, which means the payments will be fewer, which means the payments will be higher. Let me break it down another way because I'm from the deep south. I'm from Stanley, North Carolina. No, they did not name this town after me, but they should have, okay? But it's true. I'm from Stanley, North Carolina, in the Charlotte area. When you get an enhanced benefit part of that rider, and that's what you want, and it's either nursing home or the in-home care, when you prove to the insurance company that you qualify, in essence, when you get sicker, you get your money back quicker. That's really what it is, because lifetime income with annuities, regardless of the lifetime income annuity type, immediate annuities, deferred income annuities, qualified longevity annuity contracts, or income riders, in this case, income riders with enhanced benefits, you're getting your money back with interest. So when you get sicker, you get your money back quicker. Does that mean it's the best thing since sliced bread that you hear at the Bad Chicken Dinner Seminar the way it's being pitched? No. But it's nice supplemental coverage. Notice I said supplemental, not primary. It's not primary coverage. Should never be primary coverage unless this is the only thing you can qualify for and you're smoking the Newport and drinking the Jack Daniels, right? It's good secondary coverage, supplemental coverage to make sure that when you are at that end of life stage, you're going to get a lot more income coming in. All right, so let's get into the enhanced benefit weeds a little bit. I took a break, took a sip of water. My CEO walked up to me. You have to mention this. You're not mentioning this. I was getting ready to. Stop hitting me. No, I digress. Okay, when you qualify and you're going to get your money back quicker when you get sicker, typically that guaranteed enhanced payment amount is for 5 years. Now, why do you say, why is it for 5 years? Why is it 5 years? Why is it? Remember what I said? When you qualify, you typically live an average of 3 years and a maximum of 7. So the annuity companies know that. But what happens, Stan the Annuity Man, if I outlive that and I'm tough as nails and I'm from good stock and I pull my boots up and I don't take crap and I'm going to live? I'm going to live, Stan! What happens then? Well, after the 5 years, you've gotten your, doubled or enhanced or whatever the per specific contract. They're all different. I wish they were all the same. It'd be easier, but it's not. But if they were all the same, you wouldn't need Stan the Annuity Man. But what happens if you live past those 5 years? The lifetime income stream continues. It just goes back to the original amount. So in other words, you've proven to them you're going to get, if you're sicker, you get your money back quicker, but then you fought through it like the war horse and Trojan that you are, the fighter. That's what I'm talking about. And you got through that, at the end of the fight, you're still going to get the lifetime income stream. They're still going to pay you a lifetime income stream regardless of how long you live. So that's pretty cool, right? And I hope that's you. I hope you're the exception to that rule, and there's this medical miracle, and, and you live, and the lifetime income stream goes, and you say, well, what happens if I live to 150? The annuity company's on the hook to pay. How about if I live to 175? Annuity company's on the hook to pay. Remember, with all of these lifetime income products, including these enhanced benefit lifetime income riders, you're transferring the risk to the annuity company to pay you for the rest of your life. All right, what I'm getting ready to tell you is very important. I've said it before, but I'm going to say it again. Do not sell or get rid of your long-term care policy to buy one of these enhanced benefit riders. And if any agent or advisor says, well, you just sell that because you got... They have no clue what they're talking about at all. So once again, if you have long-term care and you've had it for a while, and it's like my mom has it, okay, and she goes, every time I get the annual thing, it just goes up and it goes up in price. It goes the annual price. Of course it does. It just is what it is, but you don't get rid of it. Of course, I didn't use that tone with my mom or she'd be crying. But the point is, don't sell your long-term care policy and do not replace it with this type of enhanced benefit rider. You can use the enhanced benefit rider as supplemental coverage for the current long-term care policy that you have. Now, I have covered a lot of this in detail, my Income Rider Owner's Manual. Go to my site, theannuityman.com. Sign up for my books. I'll send them to you for free under no obligation. No one's going to call, etc. And if you really want to dig in on this subject, top left-hand corner of the homepage of theannuityman.com, just click the book a call. You get me for 30 minutes, and we're going to get down and dirty and factual about income riders and if these type of enhanced benefit riders make sense for you. So, see you next time. Hit the subscribe button on your way out. Share with your friends and not friends, and I'll see you on the next Stan the Annuity Man video.